Welcome back, friends. Today I'm going to talk about a really important issue which is basically faced by an NRI sellers or a buyer who want to buy a property from an NRI buyer. Yes, friends. Today I'm going to talk about what are the various legal, tax, and practical issues when a NRI going to sell a property or when a buyer is going to buy a property from an NRI seller. Recently, I have got lots of such cases and queries from our NRI clients also, and some people who want to buy a property from NRI sellers. I think due to Brexit in UK, there the property prices has been slightly corrected, and some people I think who are staying outside want to take benefit of that, and that is maybe the reason they are selling property in India. That's fine, but as I'm going to tell you, it is not a easy process, although it's not so difficult also. If you know what is the steps and how you have to approach, it is not difficult, but it definitely not an easier process where to sell a property through a non-resident or to buy a property from a non-resident, because there is some tax implications are there which are different when it comes to buying a property from a resident or when a resident person selling the property. Now the most important part, I am going to talk about practical issues also. So it's not only going to talk about the sections and all. I'm just going to talk about how a person has to practically approach when he has to buy a property from a non-resident seller, or how the non-resident has to prepare. So for this case you have to prepare in advance because it is a time consuming activity. So it's not going to happen like you just fly one day, sign an agreement and just go away. There are some compliances which need to be done, and it's much better if you start early. Now let's start the process. First I will talk from a point of view of a non-resident seller, and then I will talk from point of view a resident buyer who is going to buy a property from a non-resident seller. So let's take the first aspect. What steps or what things our non-resident seller has to keep in his mind before he is planning to sell his property? As I told, he has to plan. So how much earlier he has to plan? Ideally, if I say 2 months, you will say 2 months is a very far, you can say, time, but yes, it requires. Otherwise, there are some other things cost which you have to bear. Okay, let's come to the point. So suppose a non-resident want to sell his property. So how he should start? So first important part for a non-resident seller is to see, there are 2 points. If I talk about tax point, first we are going to let's talk about tax point. So for a non-resident seller, when he is selling a property, there is a tax deduction at source provision in income tax which says if the property which a non-resident is selling is a more than 3 years he has hold, it's a long-term capital gain, and in that case the tax deduction rate will be 22.88%. Again I'm repeating, it's whooping 22.88%. It's not 1% as in case of non-resident. So don't be under this you can say myth that it is a 1%. It's 22%, 22.88% indeed. So if you're going to sell a property worth 1 CR and you are not going to apply for lower TDS, which is a provision which I will discuss, then you are going to your buyer going to deduct 22,88,000 rupees from your payment, and balance amount only he going to remit to you. It's a huge amount, and you can definitely claim a refund which will come, but it will be taking at least uh, maybe 6 months to 8 months, and in some cases even 1 year. So definitely it's not a smart idea. So what to do? For avoiding such a circumstances, government has enabled another provision which is called, if you feel that your tax is less than 22.8%, or in some cases they sell property where there is no capital gain at all, so you can apply in advance lower TDS certificate or nil TDS certificate. It's also called no TDS certificate. Now, what is the difference between lower TDS and nil TDS? I will tell you. Suppose you calculated the capital gain, and on the basis of that your actual tax rate comes to say 10%. So in that case, you can apply to income tax officer stating, sir, my TDS rate or my tax rate is only coming to 10%. So please allow me to deduct tax at the rate of 10% instead of 22.8%. So with your calculations and with your documentation, the assessing officer agreed. He will issue a certificate, and the certificate you have to pass it to your buyer, and buyer definitely will deduct only 10%, like 10 lakh rupees if the property value is 1 crore for example, and the balance 90 lakhs he will transfer to your account. Now, in some cases maybe there is no capital gain at all. You bought a property, now you are selling a property maybe under stress. As you understand, the market situation is not so great, so some people who require money, they are selling property, definitely not at loss, but there is no capital gain. Capital gain calculation also are different, that I will also discuss. So suppose there is no capital gain, in that case you can apply for nil TDS or no TDS certificate. That means there is no deduction, not even 1% deduction is required, and that's only possible when you do the proper calculation and you submit an application form in form number 13, which is now online, uh, to income tax officer, and from there you can get the lower TDS certificate. Now, slightly technical procedure. So better you have a chartered accountant who has experience in dealing with such cases. Even my firm, MGR and Company, does this lower TDS and help NRIs to sell their property. Even the buyer who want to buy property from you, we consult them accordingly. So you have to have better you have a, a chartered accountant who has experience in that. It will definitely do a lot of time saving and running around for you. So first procedure is that if we start from starting, so once you decided that you want to sell your property, first thing what you do, if you want to do yourself, you can do it. I'm telling you, you can apply it, but definitely it's going to a lot of time, and for NRI that will be very difficult to coordinate with the income tax office and all things. So first, anyhow, if somebody want to do, I will tell you the procedure and the complete procedure with the practical issues, practical solutions, and whatever. First step is to check your PAN jurisdiction. See, to apply for lower TDS, your PAN has to be in international jurisdiction. In some cases, whatever you say, you have been shifted, you are filing your return also as a non-resident, you have shifted to a foreign country long back, but still your res PAN is showing is not showing the international jurisdiction. It's showing the last jurisdiction where you filed the return. And believe me, in some cases, even cases, I handled a case where the person was taken a resident status of a foreign country, and he has got the PAN card at the foreign country address also, but still his uh, location, the jurisdiction of his PAN is showing the local address where he used to belong when before leaving India. So it happens, and this PAN transfer or transfer of PAN from the local jurisdiction, local income tax jurisdiction to international jurisdiction takes a lot of time and lots of follow-up. Like you have to first thing write a letter to your international jurisdiction also and to local jurisdiction also, okay, because I am now an NRI and I'm filing return also, so my PAN should be transferred to international jurisdiction because I'm willing to apply for lower TDS or nil TDS certificate. Once PAN is transferred, which will take at least 15 to 20 days even with the follow-up, then the next procedure will be to collect the documents which you need to upload online. And before the documents, you have to do the calculation for lower TDS. That is called capital gain calculation. Now, capital gain calculation for properties is slightly different. Some of you might be aware, but it is done on the basis of your sale value minus the expenses. Now, expenses can be the brokerage you are paying, the other expenses, legal expenses you are incurring. You are taking any kind of advisory like CA advisory, you can reduce from that your sale value. That will be your net sale value minus you have to reduce the purchase value, purchase cost. Now, purchase cost, if it is more, if the property you have holded is more than 3 years, the purchase cost will be index purchase cost. Index purchase cost is basically it's a inflated, or you can say inflation adjusted purchase price. So suppose you purchase a property 10 years back at the price of say 10 lakhs. So it is not the purchase cost today. You have to adjust that 10 lakh with the inflation rate, which is called indexation in income tax language, and you have to find the current date. So current date, say suppose that becomes 25 lakhs. So you have to reduce from 25 lakhs before you arrive at the net capital gain. So this is the net capital gain, and you have to basically pay taxes on net capital gain at the rate which is applicable to you. So this is the difference. For the TDS, you are paying straight away 22.88% on whole amount without any deduction. But if you do the computation calculation, there is capital gain calculation, you have to reduce your expenses, you have to reduce your purchase price, and then you have to apply taxes, if any. If there will not be any capital gain, in some cases it happens because they have bought, but if you index wise you inflate the price, there is no gain. In that case, you can apply for nil TDS application also. So this is the very first thing you will require before applying, and then you have to fill up the online form number 13, which can be filled directly in your income tax portal. And with that form, you have to attach the capital gain calculation. You have to attach your other income, if there is any other income in the India. For example, you are getting rent, you are getting interest from bank or any other. You have to add it up and you have to do the calculation. And another thing, you have to add the property which you are going to sell. That you have to basically, it's called proof of payment, like source of payment, a kind of, which income tax department asks to ascertain that that property is purchased from a declared income. So this can be your bank statement where you can put the entries. There can be check details. There can be builder's receipt. These kind of things you can put it there. Your PAN card, definitely, that you have to attach there. Sorry. Apart from that, you have to attach a draft agreement. Yes, I'm saying draft agreement, not the final agreement, but a draft agreement, because you definitely have shorted a buyer before you apply for this, and you have to definitely intimate the buyer, boss, as I am an NRI and I have to apply for lower TDS, it will take some time. So he has to have patience for 1 or 2 months. It cannot go like this. Otherwise, you will lose your 22.88% of your sale value, and in some cases, it's very like you have to wait for 1 year. So you have to intimate in advance. Maybe when you are going to accept the token money and you're going to have a kind of memorandum of understanding, there itself you mention that the further procedure will be done when you receive lower TDS or nil TDS certificate from the department, and at that rate the buyer will deduct the TDS. This will avoid any future, you can say, altercation with the buyer. Apart from those document which I shared, you have to also share the buyer's PAN number. You have to also share your mail ID, your phone number, and apart from that, you also have to share if there is a joint holder, like on the property is on your name and your wife's name or somebody from the family, both has to apply separately. And if there is no part is mentioned in the purchase agreement, like, then it will assume that both the joint owner will have a 50-50%, so they have to apply separately. There will not be one. In some cases, people ask, but my wife doesn't work, she is a housewife. Still, you have to apply separately, because if you claim that she has not put the income, you have to put the proof of that, and that will again make the matter worse, even for the filing of the case also, and for to get the lower TDS also. So better apply separately. Then you have to give some kind of affidavits, like to income tax department, which basically to ensure that from income tax department that if by mistake you have done something, or if somebody obtained the lower TDS by misrepresenting data, they will be liable to pay taxes. So it's a formality only. The complete list of data is available with us, and if you want, you can contact us, which is the number given on the number given below, and you can consult with us. You can share the complete data. Once all this data is ready with you, you have to fill online form and attach all this data. After attaching the data and submit the document, you have to wait for 5 to 7 days. There should be some response from income tax department. If it is not, you have to find out from the application itself. You will understand where your income tax data has gone. There is a assessing officer jurisdiction number there, so you can search online on the income tax website, get the phone number, and you have to dial the person and income tax officer and request, sir, we have filed so and so application, what is the status, we are in a little bit hurry, if you can. So this is the practical part. Generally it takes 1 month 30 days to issue a lower TDS certificate, either to accept or reject. Yes friends, it can be rejected also if there are not complete documents are listed. If the information is not which is required mandatorily is not provided, the income tax department can reject the application, giving the reason for doing so. So this is the all theoretical things. Now practical part. It has been done online, but it is not done completely online. So first important part, your bank transfer. Definitely it will take time. You have to contact both the income tax officers. And friends, as you know, in India, the government department and their work is like that. So you have to do a little bit follow up. So to get the PAN transfer, only after PAN transfer you have to apply for this. Otherwise, it will liable to be rejected. After the PAN transfer, once you file the application, you have to follow up. In most of the cases, the officers are nice, they do their job without asking for something. But yes, in some cases, because it used to be a very big money mentor for the income tax officers, and they, believe me, they used to charge a very handsome amount as an undertable to give you the lower TDS certificate. But trust me, if you have time, and you can wait for the 30 days or that, nobody's going to ask for the money. Basically, they ask for the money when the people hustle up. They get into agreement and then they hustle up and they want to get the work done in 10 days, 20 days. Definitely, if you want to get the work on priority, you have to pay the priority fees. But you understand, even he is asked and you have the time, you can still delay it. And still you can get it your lower TDS certificate without paying anything. Is very much possible. Just you have to be a little bit firm. So once after that, they will issue a lower TDS certificate in which your name will be there and buyer's name will be there. What you have to do, you have to share a copy of that lower TDS certificate to your buyer, and buyer will submit one copy of that to their bank from where he is getting the loan. Once he get the lower TDS certificate, he will return that much amount only, and he will deposit that amount and file an income tax return. File a TDS return. Here I also will tell you this TDS return is different than TDS return, which is a TDS on property, which is filed for the resident people. And once you file, you can check your login into your income tax portal, and you can check your TDS credits. This credit should be showing under your credit under in a form which is called 26As. So once 26As is showing, and you have to ensure it is showing, then only you will file the return after the March. And if still you have paid you can say higher taxes, you can claim the refund. If you have not paid higher taxes, you got the lower TDS or nil TDS, still you have to file return mandatorily, and you have to declare this transaction. After the declaring, filing the return, all compliance related to sale of property from your side is done, and you can have you can say relax. So this is all process. So procedure, if I say hand transfer, filing of form 13 for lower TDS or nil TDS certificate, getting the TDS getting the lower TDS certificate, transferring the lower TDS certificate to buyer will transfer to their bank, and then from bank then buyer will release, or on the buyer's request, the bank will release you the remaining amount. Then buyer will pay the TDS into using your PAN number and his TAN number. Remember, TAN number, not PAN number. So he will pay, and he will file a TDS return. After 7 to 10 days, you can check your 26As into your income tax portal, and you can check your credit. You got the credit. Then after 31st March, you have to file a return, whether there is a tax deducted or not deducted. So you have to file the return. If there are joint owner, both has to file return, and you have to declare the transaction. If there is excess tax has been paid, you have to claim the refund. If there is no excess tax paid, you just have to file the return. Now, what happens if your lower TDS certificate, a lower TDS application is rejected? It's quite possible, friends. In some cases, due to lack of document, or in some cases, maybe you are failed to grease their palm, you can get the rejection. So in that case, don't lose heart. Don't just go ahead. You have to get the deduction at the rate of 22.88% fine. But after June, after the March, immediately you can file the return and you can claim the refund. So it's not all lost. Definitely, you have your money will stuck for 6 to 8 months, but now income tax department has become slightly, you can say, quicker in releasing the refund. So refund will be coming much faster and directly to your bank account. So don't worry about that. Even you feel like your application is rejected, still you can go ahead, pay the required TDS, and then after that you can claim the refund. In that case, you should hire a qualified chartered accountant. Why I'm saying all the time qualified chartered accountant? Because a single mistake and whole of your money can get stuck. We have such kind of experiences. We have such kind of examples which sometimes we face from people coming to us, where what happened, that buyer has not paid the taxes properly, or paid taxes in wrong account, or the return is not filed properly or filed in wrong way. That way you will not get credit into your 26As, into your income tax portal. And believe me, friends, if you don't get the credit properly, you will not get the refund, and it's very difficult to even get your money. Just impossible, next to impossible. You will lose the whole money. So this is definitely a nightmare for any non-resident seller, but it happens. That's why I'm all the time saying, ask somebody who has experience about it. I'm not will not say, but everybody will not have that kind of exposure and experience. So that's why we say, if an NRI seller and buyer is involved, then better both should approach a single chartered accountant, because sometimes what happens, buyer have their own chartered accountant, seller has a different chartered accountant, and there is a happens sometimes lack of coordinations. Maybe there may be a kind of lack of coordination, some issues can arise. So better to stick with one chartered accountant. It's one small deal. It's not like lifelong engagement. So simply you can choose any experienced chartered accountant, and once this all transactions is done properly, you can just go back to your normal chartered accountant. That's not a problem. So this is all things I told about from a seller point of view. Now buyer point of view. What if you are a buyer and you are thinking to buy a property from a non-resident seller? Might be selling a stress sale, distress sale, and lucrative sale, and you just want keen to take it out. Definitely you should go ahead, but you should keep in mind the compliances here are not same as with the resident seller. The compliance is slightly different. So how a resident buyer who is buying a property from a non-resident, what kind of steps he has to do, what kind of compliances he has to do? So first part he has to do is to take TAN number. His friend, his TAN number is not PAN number. You have the PAN number. Most of us as an Indian, we have the PAN number, but we have to take TAN number. After taking the TAN number, you have to wait for lower TDS certificate. If seller is ready to is able to give you lower TDS certificate, take the lower TDS certificate, and whatever the rate is mentioned there, if there is a rate says mentioned 5%, you have to take 5% from the gross sale amount, not the net sale amount, gross sale amount, and you have to pay that amount into as a TDS, and again you have to file a return TDS return. See, there is two different transactions. Paying a TDS is separate thing, and filing a TDS return is separate thing. Both are not same. So once you pay the TDS, got the challan, don't think that everything is done. No, you have to file a return. Here the return has to file, and once the return will file, there will be form number 16B which will be downloaded online, which one copy you have to give, which is a proof that you have paid the taxes, and you have to file the return also, and then seller can check in 26As that whether the tax is properly reflecting there. Again, here also you should take some good chartered accountant advice and help on this. And after that, you have to surrender your TAN number also. Don't forget that. People forget it because once you taken the TAN number, every quarter you have to file a return. But because you are taking only for buying this property, you have to surrender as soon as you got the TDS return filed. Once these are done, your compliance is done. So you have to remember the compliance part is very easy for you, not that much complicated. First thing, you have to take a TAN number and intimate the TAN number to seller, which will be used for the filing lower TDS certificate application. Once you took the TAN number, you have to wait for lower TDS certificate. Once lower TDS certificate or no lower TDS certificate is submitted to you, then you have to, if there is no TDS, in some cases you will get a zero TDS certificate. That means you don't have to do that. Then you will not pay any TDS, you will not file in return, but still you have to take a TAN number and you have to surrender the TAN number in case there is no TDS. But in case if there is a TDS, you have to pay TDS at that rate. You have to file in TDS return, you have to surrender your TAN number, and that's all. That's all the compliances which you have to do from your side. So friends, some points you have to keep in mind, buyer and seller both. First important thing, if you are planning to go where seller is a non-resident, take time. The transaction will take time. Because lower TDS sale will take 45 days to 60 days minimum. Second important thing, take help of some professional. Either it looks very easy, you can do it if you have any kind of background, little bit search, but as you see, this stakes are very high. Like even a property is 1 crore and there's a deduction of 10 lakhs also. One single mistake, your whole 10 lakh gets stuck. And again, you have to just run around pillar to post to correct these things. So better go with some professional help. Any professional chartered accountant who is good, who has done this kind of transaction, you should definitely approach. And better if you, because already property, there is lots of, you can say, legalities involved, then you do not want to again increase the legalities or increase the, you can say, difficulty level. Better if both can agree, at least for this transaction, one chartered accountant who can work on all this tax part, and the tax part will go smoothly. Otherwise, that both, if they both fail to, you can say, coordinate with each other, and there will be any kind of professional, you can say, enviness, you both can have problem with that. So I always say, better for, at least for this transaction, you might have your own CAs, you trust your CAs, that's fine. This transaction, go for what CA, so that he can do from start to end a complete things for buyer also and seller also. Our company also offers packages where we do compliances for seller also, compliance for buyer also, and most we have a package where we do the combined compliance also. Most smooth things for any person who want to buy a property from non-resident or from any seller who is a non-resident want to sell property. So this package is like, we have thought very much and we have understood what is the problem they are facing, because already they have to coordinate with the bank, they have to coordinate with agent, they have to coordinate with lawyers, and then again there is a coordinating with two chartered accountant or this tax player, tax consultant, that takes, it is become a havoc. So better to sort it out, keep one chartered accountant, but just go ahead with this. So how it will start, I told you, and definitely you have to take some time, but it's not difficult. It looks difficult because it's slightly lengthy procedure, and once you do this and everything properly, it's very smoothly it goes. Now everything becomes online, so it's not like earlier, which used to be, earlier it used to take it 3 months, 6 months of some cases, but now it is not the case. And if somebody has experience, he can definitely get the work done faster. So as I told, buyers and sellers both have their responsibility. Take 2 months time and start it. There's no need to do, no need to panic, no need to pay anybody extra amount, because I have seen the people are charging like 50,000 lakh rupees something. But normally I think it should happen in 12,000 to 30,000 rupees, something in between. Like if one seller is only there and one TDS has to reply, we charge 12,500 something in around as GST. And if there are two, it double ups. For filing return also, I think everything comes in 20,000, 30,000 budget. So you can definitely talk to our team and get a good package or a good understanding of what it costs and what are the documents. definitely we need to discuss, we need to understand. If there are two sailors, one is resident, one is non-resident, then there will be separate procedure, like resident will go 1% deduction, 50% on 50% of sale value. Non-resident will go as usual way. So friends, as a property matter, just be sure, because see, I have seen people. One more question, I will take it. Some people say, if my PAN is still showing a local jurisdiction, why I need to show as a resident? Why I need to transfer? I will just give 1% and I will get it done. Who knows? Friends, don't do this mistake, for God's sake. The buyer and seller both will be screwed in very big way, because all the transaction of property is reported to income tax also. Maybe you can get the transaction, you will get the money, you can get money outside India also, but what after that, when income tax initiate the action on you and the buyer who is still in India? It will be nightmare for both of you. The penalties, the procedures, and the palm greasing, it will definitely not be a nice experience you want to have. Another important question which comes in my mind: mostly seller, after selling, they want to transfer their money outside India, definitely to purchase either home there or some other uses. What is the procedure for that? For that procedure, they have to again contact a chartered accountant and get the form number 15CB. 15CB is a kind of certification which you have to take once you are transferring money outside India. So uh, this is a certification where it is mentioned the purpose of transferring. As of now, an Indian or a non-resident Indian can transfer up to 1 million without any approval. Just he need to mention what is the purpose for that. So this is also generally in our practice we cover this part also. So it's a complete end-to-end solution for any buyer who want to, any seller or buyer who want to buy a property from non-resident, or any seller who is a non-resident who want to sell property. So friends, I think I have asked most of the questions which generally I face. I have answered here. If you still get any kind of queries, you can mention here in the comments and we'll try to answer it. I have mentioned my mail ID also below that, or you can search my mail ID with the Arun Tiwari name or AKD Associates name. You can get it, the mail ID. You can mail me your queries. We'll try to sort it out. This was a effort, or you can say a kind of guidance from our side, so that you understand whole process, and you should not be, nobody should be misguiding you and taking undue advantage.